Let's start off kind of big picture, Stephane. Donald Trump seems to be starting a trade war. As the CEO of Euronext, do you see that impacting your business?
I think one of the most interesting features of market momentum over the past 6 months is that the underlying performance of indices and blue chips has been relatively immune of macro trends or strategic movements that in the past would have been much more impactful on markets. In reality, the indices are reacting in a moderate manner to all the noise and maybe the reality, the emerging realities of trade war. And it's such as it's clear that the investors are more focusing on the underlying trends of the companies, the fundamental performance of assets, the fundamental bedrock of growth, in particular in continental Europe. So I remain cautiously optimistic about the impact of markets of this trade war noise.
So you're saying that there isn't much of an impact, and volatility, which did go up, has come back down again. So is there do you see, how does that affect volumes? Essentially, you're in a volume business. So what does the volume story look like around this?
No, volumes are very good, volumes are strong, but what is very interesting is that in the past few years, you would have expected much stronger volatility arising from geostrategic moves, from international crisis of this nature. And the very interesting situation we are facing today is that investors and markets react in a much more cautious and calm manner to events of this magnitude.
Is that, Stephane, I'm curious as to why you think that is the case. Is it because we have still ample liquidity being provided by Mr. Draghi at the ECB? Or is it because investors are increasingly investing in a different way? They're using factor investing. They're looking at momentum and liquidity and all the other factors. Are investors approaching the market in a different way?
It's a combination of multiple factors, and some of them are being analyzed now because it's a new emerging reality. I would say that for sure there is an abundance of liquidity. There is also a growing component of passive management. Some scholars are even mentioning that robots and algorithms are less sensitive to news flows or to breaking news and much less sensitive than human beings. All these sort of factors have an impact in the fact that the underlying performance and the fundamental drivers of companies, of assets, seem to be more relevant and impactful than surrounding strategic noise. And until it translates into impact on numbers, it seems that it has a much weaker impact than it used to have even a couple of years ago.
Stephane, what's the story with consolidation in your business? For instance, are you pursuing more consolidation in Europe? People have talked about maybe the Spanish exchange coming into play. Are you interested in BME? Do you see further consolidation coming down the road?
The priority of Euronext is to diversify its top line. We have tripled the market cap of the company over the past 4 years. It was IPO'd for 1.3 billion. It's now close to 4 billion. And the priority of the company is to diversify its top line. BME is determined to remain independent. There is no dialogue with BME, and our focus and our priority is definitely to diversify our revenue streams more than European consolidation.
Let's talk a bit about regulation. The head of the AMF recently said, quote, "The jury is still out on whether MiFID II has brought more transparency to the markets." Has MiFID II delivered more transparency, do you think, Stephane?
The intention of MiFID II was very clear, to bring more transparency, and by and large it did so. However, there are some loopholes because the construct of MiFID II was to be very precise, very granular, and as you can imagine, since this regulatory framework was developed almost 5 years ago, was designed almost 5 years ago, things have changed a lot, And there are here and there a few loopholes, like the regime of systematic internalizers, for example. So regulators, policymakers are spending time analyzing the contrast between what was the initial intended objectives of MiFID II and what is the new market reality that developed since the beginning of this year. And it's quite clear that there will be some fine-tuning or to adjust the emerging loopholes. So I'm confident that the objectives, the initial objective of bringing more transparency will prevail.